Good morning. It's October the 16th, 2015, and we're getting ready to trade another day today. Uh, the biggest dynamic that's going to face the market today is equity option expiration and the inverse relationship uh, between treasuries and the E-mini is, it's just locked in stone. That's where it is, especially early in the session. As we get to mid-session and on, it kind of dies out. And one of the things that we're going to face today now, thanks to the zero hedge, we're all alerted to this particular news. But you can see right here, and this is the day before the markets. We've got up rally the day before, the short squeeze, up rally. These are tendencies all the way through. The next day tends to be down. Not all guaranteed so, because right here on April, up a little bit, then down to a weaker close. In May it was straight down. In June it was straight down. In July it was down, went sideways, then broke hard. In September, it was straight down. So what do we have in October? Now, just by virtue of the fact that we have this chart or screen right here, the E-mini may not break because this information is out. Remember, the players in the E-mini will, it's perverse, but it always seems that it goes in the direction that hurts the most people short term. So if that is the case today, as far as treasuries go, we should find support below the market, and we should be prepared to buy it, especially after the first hour or so of trading in equities. Right now we've got resistance. When we look at yesterday's charts, 14.5. We have this spill from 12. So 12 to 16 is pretty good resistance. The high in the overnight session is 9.5. So 9 to 13 is going to be sell 1. Then 19 to 23 will be sell 2. And when treasuries are rallying, it's really, it takes a long time for the treasury to get to the number 2 sell zone because of the strength in the 30-year. On the buy, we have pretty good buying, so we've got buying in the buck to 04 will be buy 1. And then the 25 to 29 will be buy 2. We also have significant news. I think the most significant news out overnight was Turkey shoots down an unknown drone. Supposedly they shot down a Russian fighter earlier in the week. China has said we will respond with force if the United States challenges our latest land grab or territorial land grab. The South China Sea is ours, hence the name, China Sea. And you better not screw with us. So what will our administration do? They've said that they're going to send warships to support their allies in the region and challenge China. We'll see if they do it. I would be surprised if they did. This administration has absolutely folded or capitulated in any confrontational situation except for the Republican Party and conservatives. So I don't think they'll take China on, but we'll see. Okay, industrial production, it is a market moving number. It is forecast to be down -0.3%. Capacity utilization, nobody pays any attention to it. It's lower than last month at 77.3. Manufacturing is, if it's not in a recession, is headed there. We've lost the oil production. The construction industry, Caterpillar, is there. The bright spot is the automobile industry. If we're to lose that, things would change. JOLTS, everybody will point to JOLTS as the jobs are there at 5.73 million. Consumer sentiment, 89.5, up from last month's 87. That number could come in lower than forecast. Atlanta Fed, Inflation, no one will pay any attention to. Plus 1.7%. I believe that's for manufacturing. And then Baker Hughes rig count at 975. Wasn't too long ago, it was at 1031. So the focus is industrial production minus 0.3. That can't come in lower than forecast. And then consumer sentiment. That's number 1 and number 2. So we'll see how the news plays out. But I think after the news is absorbed this morning, then everybody will get back to option expiration in equities, and that favors, by the end of the day, lower prices. 2000 is where the market maker makes the most money. 2020 was the call play yesterday. Always something, isn't I you mean I got to pay attention to option expirations? Come on, give me a break. Screw it. I'm going back to technical analysis. I don't have to worry about any of this stuff. Everything I need to know is in the last price. That tells me if the market's going higher or lower. We know how difficult it is to make a decision based on the last tick or the last price, right? I'd say it's damn near impossible to consistently be right on whatever the last quote or print was. Okay, the knob spread right now, let's see, is at and I gotta do it the old-fashioned way. $29.30, up from yesterday's close. So here we have the 30-year, and we've got resistance at 12 to 16. That's sell 1. Then 23 to 27 will be sell 2. I think we're going to be whipped around by the old E-mini. I like to buy 29s to 01s. May take a 5 to get in. Then 17 to 21 where we were last night. And 160 overhead is the big number. Okay, looking at gold. Okay, it's sold. We had this move out of the middle, and we've moved down into our 75-77, which was our number 2 buy zone yesterday. And so we got the breakout back here from 68. So 68 to 70, you can see right here this little area is probably pretty good support. So 76, 74 buy 1. Leaning against that 68 number, 69, 71 buy 2. 80 to 82 sell 1. 85, 87 sell 2. With all that's going on in the world, I think the long side is a better side to trade from, given the unpleasant surprises that we could wake up to in the South China Sea, or Turkey shooting down another Russian aircraft. And it was just rumored that it was shot down, and there was no confirmation on it. It was just reported. But we're in a situation where we have adversaries flying and shooting very close to each other, and that's problematic. Easy for accidents to happen, or somebody hit the wrong button at the wrong time. Okay, the euro is lower. We liked the 1350 area yesterday, still like it today. 1315, 1325 by 2. On the top side, 90 to 1400, sell 1. That's got to get through 75 to get there. That puts us towards the top of value. And then 1425, sell 2. Crude was up overnight, and tensions are rising. And the Turkish drone incident, if true, and it's always hard to say. I mean, Turkey, in a lot of ways, is deteriorating pretty quickly. They don't like the a lot of people there don't like the present government. Okay. I rolled to the December contract today. You can trade November till Monday, but Monday you ought to roll. Expiration is on the 20th. I'm in December today, 2 days before expiration. The big boys usually have moved to the new contract. So 47.50, 47.75, sell 1. 48, 48 and a quarter, sell 2. On the buy side, because prices usually converge and move lower, first little band of support is going to be 75 to 47. That's going to be buy 1. And the markets are acting like potentially there's a short squeeze there. Then 46, 46.25 will be buy 2. A little early for the squeeze to get going, but it could happen. But due to convergence, I think there's over the next couple of days, certainly by Wednesday, the price of the December contract will roll towards November's. Oh, the London high was set at the 47.75 area, and we'll honor that. And we'll see if we can't come down and take out 47. Okay, I'm going to put that chart up again on the E-mini. I think it bears pointing to again, and you can see the blue areas up there. That's the day before option expiration, and we have 1, 2, 3, 4, 5, 6 out of the 8. 6 out of the 7 events were straight down off the opening. We had one where it rallied off the opening, then it came down. So 6 out of 7 and put the odds on the sell side in equities. And yesterday's action was in the 2020 calls, 2,000. We've talked about it since last week. 2,000, if it closed at that level, would make the market makers the most money. Would wipe out the puts and would wipe out a significant number of calls. So that's the tendency for today, and because it's in zero hedge, my guess is they'll probably try to rally the E-mini off the bat early in the session, just because that knowledge is out there and widely disseminated. So I think, again, the easiest trade to see is this failure to take out and hold 2020. The low volume number is 2450, so 20 to 25 is pretty good resistance, and so I think today 19s to 24s, sell 1. If we get through that, we got this low volume area up there that goes all the way up, and then 30 to 35 would be sell 2. On the buy side, we have all these single prints. You see that breaking out from 2000 was there. It's a long way away, but 2000, 2005, buy 1. I think the market's going to make I think the market will try to close at 2,000 today. Then 90 to 95 will be buy 2. So the easiest trade to see is failure to take out 2025. Industrial production off 0.3%. Capacity utilization 77.4, lower than last month. JOLTS, job openings 5.753, Consumer sentiment 89.5, up 2.5 points from last month's 87. Atlanta Fed and business inflation plus 1.7. Baker Hughes rig count 975. So that is the news. That's what we have to get through, and the tendency is for today to sell in the E-mini. And if that is the case, that will support and rally treasuries and should take gold up with it too. Be back with you as soon as possible. Got plenty to do in a bit.